Hey folks, Dan Frio here, the Mortgage Update, and today is November 6th, 2019, and what happened today? We picked up almost everything that we lost yesterday. I told you so. So let's see what happened. Basically, the stock market in the other markets really didn't do all that much, but what happened today is there was a bond auction, and it had good demand. There's a lot of people buying bonds right now, but the whole thing, it's just in a nutshell, and I'll be quick tonight because I just got home and I'm going to have some dinner, and it's late. But the whole thing right now is hinging upon the China, or the deal with China in regards to tariffs and everything. Also, Q3 productivity actually fell by 0.3%, much lower productivity than we were expecting. Okay, labor costs jumped 3.6%. So that's a huge jump. So with manufacturing and production down, wages going up, that's eating into company profits. So what that's doing is that's giving a sign that things are going to start to get a little weaker, and thus possibly that recession fear that everybody's thinking in the next 12 to 18 months might be coming to reality. So this might be a good time to do something. Tomorrow we see initial jobless claims come out. That's going to paint a big picture on what the market's going to do. But the biggest thing right now is the China trade. I'll show you that. Markets teeter on Trump's logistics snag is a sign of big issues. Wall Street and everybody right now, the speculation is all about the China trade right now. The impeachment stuff starting to kick to the sidelines, Brexit, that all of a sudden you haven't heard anything about Brexit in the last couple weeks. Now everything, 2 days ago we had a rally, or yesterday we had that rally in stocks, and it killed the bond markets because of the China deal. And remember I said, I don't think much is going to come of it because we're too far apart in too many issues. So that's what happened today. It basically came back and said, stocks drift to close steadily lower. But right here's the key thing. Treasury yields fall. As the yields on that fall, normally, in a ripple effect, you see the rates in mortgages fall as well. So let's go to what happened, and we'll look at some technicals. Again, my name is Dan Frio, the Mortgage Update. You can hear me in Chicagoland area on WYLL radio every night at 7:30 to 8 p.m. Or you can watch me or listen to me on WIND Radio Chicago Saturday mornings from 7 to 8 a.m. And I'm a mortgage advisor in the Chicagoland area, but I can help people throughout the whole country. So if you need my help, just check it out. Down below in the description, there's a way to email me. There's phone numbers. You can even apply online. If you have any questions, just put a comment down below. If you want to shoot me a question directly to see if I can help you in any way, just email me at dfrio, which is Frio, at parksidelending.com. So what we follow in this channel is the MBS market. This is the tool or the bond that actually determines mortgage rates. Okay, this is the price of a bond. So as prices move up in this area, you see prices going up, yields or interest rates come down. Okay, so this was a good run. You saw that. And then we gave it back and almost gave it back all the way down to the bottom here. But we had a good rally last week, and I locked a lot of people. If you've followed my channel, go back, and right in this range, I was locking some people because I wasn't comfortable with things, and then we gave back to here. Then I said yesterday, don't lock, because I'm estimating we're going to get back in this range, and we're going in that direction. You can see these lines here. What we follow here these are technicals, and the technical markets, basically, they're there in place. If the world there's really nothing going on in the world, this is where things trade. So if think of it as a stock, it's going up and down and up and down, and some technicals are involved, and the appetite of investors to buy the bonds. But the news, why we have such dramatic moves in this, is the world economy. As the world gets slower, we have issues, or Trump tweets about something, the China deal, the tariffs, Middle East, impeachment, all that stuff brings in uncertainty in the markets. So what happens is when the world is really good, the economy's booming, and there's no issues, people push all their money in the stocks, and they have good returns on buying stocks. But when there's uncertainty, you'll hear a key phrase. It's called flee to safety. Okay, what they're doing now is they're taking their money out of the stock market. They're not putting it under their mattress. Basically, what they're doing is they're buying bonds, and mortgage-backed securities is a batch of bonds of mortgages to give you a good yield. Okay, so that's what this is, and this is the vehicle that determines mortgage rates. So you got these lines that are called the Fibonacci levels. It gives us a floor and a ceiling, and we usually trade between these lines. And then you have the more in-depth lines, or what do I want to say? This is trends over time. 25-day moving average, 50-day moving average, 100-day moving average, 200-day moving average. So it just averages out what's it been doing the last 25, 50, 100, and 200 days. So that gives us more guidelines in here of what's going to happen. And you can see a lot of times that we hit these levels or right around these levels. So today we hit, which one is this? The 25-day moving average. We hit it right there. Okay, and stopped. That's crazy because, you can see that hit it, stopped. That hit it, stopped. A lot of times you see that. So if there's no news with China tomorrow and the employment numbers or unemployment numbers come in maybe not so good, is what I'm kind of looking at. I'm seeing us, again, go in this range. I don't see any big volatility unless we get something comes back from the China trade saying it went through or it didn't go through. If it went through, you're going to see rates jump. If it gets squashed, you're going to see rates go down, thus this starting to move up. So that's the biggest thing that we're watching in the next few days. So if I see any moves even midday, I'll alert people, because a lot of people that watch this or follow this channel are realtors and people in the mortgage business. I know a lot of people they train their salespeople to watch this and kind of educate them as well on what's going on in the markets, especially in the mortgage-backed securities markets, and what to look for in the future, and what my recommendations are. If you go down to here, you noticed yesterday that the person that puts this together, they were saying to lock, and I said don't lock, and it paid off in our favor. So sometimes it's good to be lucky than smart. So hopefully I'm lucky and kind of smart. So that's it for tonight. Sorry I cut it short, but just got home. It's late. Want to have some dinner and then just veg out a little bit. So if I can be of any help, just reach out. Love to help or answer any questions that you got. Also, don't forget to give me a thumbs up, please. Share the video. Subscribe if you haven't subscribed yet, and leave a comment. I answer every comment. I usually get back with you within 2-3 days. Sometimes I do it instantaneously, but normally within a couple days I'll answer you. So thanks again for watching. God bless. Have a great night. See you tomorrow.